This interview is for information only and should not be considered as investment advice or a recommendation to buy shares in the company featured. Welcome to this Stock Box interview.
Joining us today is Doug Ramshaw, the President and Director of Minera, Alamos. Thank you very much for joining us again. Doug, of course, we met in person for the first time at the Resourcing Tomorrow conference. How did you feel it went, first of all?
It's an excellent conference, I think. London has a unique group of investors. I really only see in London when I come through, and a lot of new faces this year, which maybe is some encouraging green shoots that people are looking to come back into the resource sector. So it's probably one of the first conferences I can remember in the last 5-6 years where the gold price was also cooperating while the conference was going on. So yeah, it was an excellent 3 days in London.
Indeed. Well, the gold price was definitely the talk of the event, and that's quite good, of course, for you, because that's what you're into, isn't it? Is gold. If I remember correctly, you're a gold mine developer or builder. You're not an explorer. You're looking for low capital intensity projects. I think you've built one mine for circa 10 million Canadian dollars, and you've got the next one coming on next year for about 25 million. And are you looking to get to around 60,000 ounces a year of gold production?
Well, I think these first two get us to 85, roughly.
Okay.
The first mine we built in the middle of the pandemic for $10 million. We hope to ramp it to a consistent 20,000 ounce a year producer next year, which, whilst it doesn't seem like much, we're not servicing a whole bunch of debt. It's a low-cost operation, both in terms of its build cost, but also its operating cost. So even at circa 20,000 ounces a year, we should be spitting off $8 to $10 million of free cash from operations. And I think that's important because we're in a business which is capital intensive, largely. I mean, we do it with low capital intensity, but it is cash consuming. So the ability to not have to rely on equity markets to be self-funding is paramount to our business model and for our shareholders' comfort that they don't suffer the tremendous dilution that can so often plague our sector.
I remember you making a big point of that when we met. You were very conscious of dilution there. So, I mean, from your website, I see you've got a path to 150,000 ounces of gold per year, and you reckon during the course of next year you'll be about 85? So over halfway?
When we bring the second mine on, that's circa 60 to 70,000 ounces for the first 4 years. It's got an 8-year life, averages 60,000 ounces a year. So with that second one, Cerro de Oro, which is in permitting right now, once that's built, which is about a 6-month build, I think we're kind of looking at a forward run rate for 2025, and we're about to enter 2024, so it's really not that far off, of around 80 to 85,000 ounces a year of kind of sub-1,000 AISC production. So very meaningful against the industry cost curve that these are high margin ounces. We don't need a higher gold price to be very profitable with our style of operations. We'll gladly take it.
Okay. And I remember you saying you wanted to put 23 behind you. Was it not such a great year for the company, really?
No, I mean, to quote the late Queen, it was kind of our annus horribilis, and definitely one we want to put in the rearview mirror. Not because I think we made tough decisions. No one wants to see a gold producer, that is ramping up production, actually make a conscious decision to throttle back that production. And there were a number of reasons behind that. First off, even after successfully building on budget in the middle of the pandemic, we then got hit by a very significant 3-year drought in northern Mexico. It impacted Southern California as well. So it's one thing spending the money to mine and get your gold on the pad, and we focus on open pit heap leach operations. But if you're not comfortable that you've got the water availability to efficiently leach out everything that you've incurred that mining cost for, you could blow a giant hole in your balance sheet. And we actually made a conscious decision to throttle back things to keep our balance sheet as clean as possible. So we've largely stuck with about $20 million in working capital throughout 2023, but it came at a cost of of scaling back production. Production we expect to be able to ramp up again in 2024. We're waiting on a permit amendment that will allow us to achieve that. Hopefully, we'll get that early in the new year. But it's sometimes the best decisions you make, your shareholders might not like them, but they are the right decisions. And I think our shareholders would have been far more concerned if we'd listened to them, which is often, unfortunately, the worst thing you could do is listen to a shareholder rather than listening to kind of the heartbeat of your own operations. They would have been far more mad if we'd blown all our cash in an attempt to satisfy them in the short term rather than making longer term prudent decisions.
Sure. Because you've got a fair bit of cash in the bank, haven't you, from memory?
Yeah, I mean, we've got working capital of $20 million. We should finish the year at roughly 10 to 11 million in cash. At a time where the sector is actually, despite the gold price, starving for cash inflows. Very, very important to maintain a healthy treasury. Companies that haven't done that have been kind of brutalized by the market, which anticipates, well, they've got to raise money, and the last thing you want is that situation.
Yeah. So how will you prudently use this cash then? Is it 3 projects? You've got the one that's in production, but you want to ramp it up, and then the other 2, and you want to get to that significant free cash flow. Because I remember you saying you don't really want to rely on the market for money, and dilution is very important to you. So how can you prudently use the cash you've got to increase your free cash flow?
Yeah, well, the expansion at Santana is only a few $1 million. And that really allows the company to get back to, a steady state, 4,000 to 5,000 ounces a quarter. And when we've had it at those rates before, it spat out $3 million in a quarter in free cash. So a very quick payback of that expansion capital that we can self-fund. Cerro de Oro, which is, again, a modest build, I can't control when the permits will come, but I could control the funding. So we lined up a $25 million funding package that's available upon receipt of permits. So again, the shareholders are not going to wake up to a nasty surprise of, hey, good news, we got the permits, and then we haven't had a plan to how we were going to build it and fund it. And suddenly, they're waking up a week later to some big dilutive equity raise. And we do take dilution seriously. It's, I bought 2% of the company in the market over the last 4 years. And it's amazing when you've aligned yourself and your dollars with your shareholders, how remarkably resistant you are to unnecessary dilution or dilution, period. So again, that's why we got that package lined up, which has no equity component to it, to kind of send that message. I'm proud of the fact that over the last 4.5 years, our dilution has amounted to 30%. We've gone from 350 million shares to 460 at a time of building one mine, bringing another project through into permitting. I've seen companies that will dilute their shareholders 40 or 50% in one financing. So again, it is something as big shareholders ourselves, we're very cognizant of.
Okay. And the third project, is it La Fortuna?
Yeah, La Fortuna is sitting there already permitted. We could build it. Why we're not is it's actually a very high grade open pit. So much so that you wouldn't. It's not as simple as building another open pit heap leach there. It's a 3.5-4 gram per ton open pit. We framed a PEA around it in 2018, but just around a high grade starter pit, which had a 5-year life to it. No one likes a short mine life. We know that there's tremendous exploration upside potential there. What we'd like to do is use the cash flow coming from our first 2 operations to really drill that out. And so the version of La Fortuna we plan to build, I think, will be vastly superior to what's already presented in a good economic study.
Okay, so the focus at the moment, then, fair to say, is on the first 2 projects, Santana and Sierra de Oro. And with regards to Santana there, free cash flow is already being generated, but you want to get, is it to circa 40 million US throughout next year?
Yeah, I mean, when we bring on Cerro de Oro and Santana combined, that 85,000 ounces a year, we're looking at 85 million US in operating cash flow, and I would say, north of 40 to 45 million US in free cash generation.
Okay.
So that's a really nice position to be in, because I think the exciting part of our company will be iteration number 2. The projects we have right now allow us to get on a base case to kind of around 150,000 ounces a year. There's an upside case at a number of the projects where we can maybe push that closer to 200,000 in time. But I think what's exciting is when you're spitting off that amount of cash, what can you do? What can you use it for to grow the next iteration of the company? And I think because we're such prudent spenders of cash, our biggest challenge will be efficiently reinvesting that money in the business. So I have a great hope that we will be able to deliver a dividend or some form of return of capital to our shareholders moving forward, because it's just inefficient to have that kind of cash building up on a balance sheet.
Indeed, yes, a dividend payment would be very nice for shareholders there. So just going back to when you might get payback, would you expect payback on Santana?
Santana, I mean, all these projects are sub 1 year payback. So
sub 1 year, okay.
Cerro de Oro is a 25 million US capex. At $1,600 gold, it has an 11-month payback on it. Again, it's our business model is designed around IRRs, not MPV, so that we might not have the biggest MPV on a project, but if we're in the business of making money, having very quick returns on capital and good returns on capital with our kind of triple-digit IRRs, that really is a great foundation for the growth.
Okay, and then just looking at the funding package you prepared for Sierra, circa 25 million, will you have to seek methods of funding for that then, whether it be debt or other methods?
No, so that's a debt and royalty package.
Debt and royalty, okay.
Yeah, so we've I like royalties, but I don't like having them kind of life of mine at a certain rate. So we've negotiated a very healthy buyback on that. It's a 2.75% NSR. We can buy back 2% of it. So that's important when we know there's a bigger upside case at Cerro de Oro. You don't want to price the royalty off your initial resource when you know it can get bigger. The loan, again, can pay back inside of a year. So, we've been debt-free up until now. We don't wear that like a badge of honor. There's a time to take on some debt. These projects, I think, more importantly, work in whatever gold market is thrown at us. We stress test everything at $1,250 gold, because I think we're trying to break that cyclical nature, not just of the gold price, but of mining equities that can make hay while the sun shines for a few good years, but struggle during times of lower gold prices. I mean, hopefully we've got a new normal for gold prices moving forward that will serve everyone well. But I think it's really important to build a business model that works in the worst of times, as well as taking advantage of the best of times.
Absolutely. Well, just thinking on the business model, and could you sum up your sort of MO, what you look for when looking for projects?
Yeah, I mean, I think there are a lot of projects that we build in this sector that probably shouldn't be built, that don't necessarily make a lot of money, and certainly don't serve shareholders well. So we're not looking necessarily for big projects. I think we want to mine ounces that make sense and make money. So, I mean, the next one we're looking at, and we're always looking to see how can we feed the pipeline, could be anywhere between that 400,000 or 500,000 ounce starting resource and maybe 1 million ounces, something that sequences anywhere from 50 to 80,000 ounces a year in terms of incremental production profile, which for 150,000 ounce future kind of portfolio, adding 50 or 80,000 ounces from another project is really meaningful production growth. So it doesn't have to be big; it just has to make sense.
Sure. Okay. Well, thank you very much. And just as we, of course, end the interview and, of course, end the year, what's going to be the focus as you go into Q1? Where are the efforts going to be placed from the company?
Yeah, I mean, hopefully very early on Q1, we get this permit amendment. There's been some movement on amendments to existing mining permits in Mexico in recent months. And we should be on deck for receiving one that we've been working on that's been dragging for the last little while, early in the new year. Then if we can get Santana up and running the way we would want it, we're cash flow generating. So then it's a bit of a waiting game for when the Cerro de Oro permit comes through. But our team's operated in Mexico for 14 years. We love working down there. You can build mines cheaply and you can run them even cheaper. So I think 2023 was a year I'm gladly put in the rearview mirror, but I think we have high hopes for 2024. And I think the gold market looks like it's going to cooperate for 2024 as well, although all indicators for gold are it should have a good year. Although I joke with friends, that means it probably won't, because it seems to be this perennial commodity of disappointment that just when everything looks like it's going to be good, it doesn't always end up that way. But no, I think 2024 should be a vastly different year for the company than the year we've just gone through.
Okay. Well, thank you very much for your time today, Doug Ramshaw, the President and Director of Minera Alamos.
If you enjoyed this interview, then give us a thumbs up, a like or a retweet. Subscribe to us on YouTube or follow us on Twitter and hit that notification bell to be the first to know when we release new content. There's loads of great content on our website too, across all our programs at stockboxmedia.com. Thank you for watching.